Welcome to the deep dive. Today, we are tearing into your source material to uncover, well, some critical insights on one of the most confusing assets in crypto right now.
Toshi, or Toshi.
Exactly. And it's confusing because it perfectly captures this sort of moment of chaos in the market.
It does. I mean, the sources you've provided have everything. Technical reports, market sentiment, and even some pretty radical philosophical takes on the entire financial system.
So our mission today is pretty straightforward. We're going to give you a clear map to navigate all this noise. Toshi is a hybrid asset.
It is. It's part meme coin, part serious utility infrastructure on Coinbase's layer 2.
And the most stunning thing, I think, is just how contradictory the signals are.
Fundamentally contradictory. I mean, look, the macro context is just overwhelmingly bearish. We're talking a brutal 6-month depreciation of, 32 to 33%. If you're a long-term holder, you're looking at a structural crash.
Yeah, and this is the crazy part. You zoom into the shorter time frames, like a 4-hour chart, and you see these undeniable, urgent buy signals flashing.
Yeah. And that creates a huge technical challenge, but it also asks a much deeper question, right? How do you value something when its utility says one thing, but its price chart is screaming the opposite?
Okay, let's unpack this. We have to start with Toshi's identity, because it's not just another zero-utility meme coin.
Right. It's been positioned very deliberately as the face of Base.
It's a narrative anchor. It pulls its identity from, the very recognizable cat of Coinbase CEO Brian Armstrong.
But it also evokes Satoshi Nakamoto.
Exactly. It's a blend of viral culture and founding myth.
And the market seems to respond to that blend.
Oh, it does. The sources show massive, verifiable community support. We're talking over 3,000 posts a day just on X.
Wow.
And that level of social energy isn't just hype. It's the engine that maintains liquidity, and it provides a sort of necessary valuation floor.
Okay, but let's strip away the meme for a second. What's giving Toshi its structural defensibility? That has to be the utility stack on Base.
Absolutely. Toshi is deeply embedded in that ecosystem through Toshi tools. And this isn't a novelty product.
No, not at all. It's core infrastructure. We're talking token lockers, liquidity lockers. These are essential things that enhance trust. They stop developers from rug pulling.
So Toshi is basically providing the shovels and picks for other builders on Base.
That's a great way to put it. And that brings us to Toshi Mart.
Which is described as a no-code meme coin generator and trading platform.
Right. And it was responsible for launching over 120 projects last year alone. It's really cementing its role in Base's development.
And the roadmap points to even more, doesn't it?
Yeah, we can't ignore the potential Toshi Mobile initiative.
This seems like a really ambitious move towards real-world applications.
It is a decentralized, privacy-focused mobile service, maybe with tokenized data plans. It would shift Toshi from purely virtual infrastructure to, tangible utility.
So let's tie this back to that valuation conflict. You have this whole utility stack, the lockers, the mart, the mobile plan. It all acts as a defensive layer. If Base succeeds, Toshi succeeds.
It shares in that success inherently.
So how can an asset with that much utility tied to a major layer 2 still be in a 6-month structural crash?
That is the core puzzle. And to solve it, we really have to get into the multi-time frame technical breakdown.
Because that utility, it's a long-term positive, but it's just being overwhelmed right now.
Exactly. Overwhelmed by short-term market dynamics and just the weight of its own price history.
What's fascinating here is that the dominant structural trend is still just so negative.
It is. The daily and weekly charts are maintaining decisive sell and strong sell ratings. It confirms the prevailing movement is fundamentally downward.
It's fighting a really strong gravitational pull.
Correct. But here's where it gets really interesting, the divergence. The 4-hour technical rating registers a strong buy.
A strong buy.
Based on 15 indicators leaning bullish and 0 signaling a sell.
Okay, so if I'm a listener, how do I even begin to reconcile a strong sell on the weekly with a strong buy on the 4-hour? Isn't that just a recipe for market whiplash?
It is precisely a guarantee of whiplash. It shows the difference between structural investing and speculative trading.
So the 4-hour signal is just driven by short-term bargain hunters.
Exactly. Aggressive, focused counter-trend rallies. It's fast, maybe automated, but it's not new. Sustained capital coming in. It's unsustainable energy.
So the downtrend is the highway, and the strong buy is just a very intense, very temporary off-ramp.
Perfect analogy.
Yeah.
And the result of this collision is extreme market instability. Our sources confirm volatility is dangerously high. We can measure this with the average true range, the ATR. High ATR means danger.
You also mentioned conflicting extremes in the momentum indicators. This is where it gets really confusing for people. Can you simplify that?
Sure. The momentum indicators were basically tearing themselves apart. You've got the RSI, the relative strength index, up in the high 80s, and the stochastic oscillator, or STOCH, is at 100.
And that means extremely overbought. A drop is coming.
It suggests that yes, but at the same time, other indicators like the stochastic HRSI and the ultimate oscillator are both at 0.
So extremely oversold.
Meaning a bounce is overdue.
That is the textbook definition of a volatility trap. The market is a high-speed blender right now.
It is. It destroys leverage and shakes out anyone trying to perfectly time a top or bottom.
So to escape this chaos, what does Toshi need to do?
It needs a massive move. To reverse this 6-month downtrend, it has to clear a critical threshold, the 200-day exponential moving average, the EMA.
What's that specific hurdle we're talking about?
It's currently sitting around 0.000573. And that's not just some random line. It's the widely accepted line in the sand, the market's center of gravity.
And clearing that requires a
rally of roughly 46% from current levels.
Wow. That's not a small bounce. That's a sustained, powerful rally just to get back to neutral ground.
And until it hits that point, every upward move is just a high-risk bounce inside a larger crash.
And we also have to factor in the exchange listings.
We do. Listings on major exchanges like Binance Alpha, OKX, CoinOwn. They boost visibility, which is good.
But they also trigger volatility.
Acute short-term volatility. And usually, sell pressure, as early investors finally have the liquidity to exit their positions.
And we should probably highlight the South Korean influence. The sources mentioned direct KRW pairs.
Yeah, the South Korean one. That market has a notoriously passionate, high-volume retail trading base.
So that just amplifies the swings.
Substantially. It floods the market with highly speculative capital, making it even less predictable.
So if you're our listener looking at all this, the utility, the crash, the volatility, what is the actionable framework here?
The recommended approach has to be highly tactical. Intraday or scalping.
Short-term trades only.
Very short-term. Exploiting the volatility with surgical precision, using very tight, narrow stop losses. Swing trading holding for days or weeks is just strongly discouraged.
And the long-term thesis.
Right.
Is this a buy and hold for the next cycle?
Long-term, it's a high-risk, conviction-based allocation. Your conviction has to be in the successful rollout of the Toshi Mart overhaul and the Toshi Mobile initiative by 2026.
And until then?
Until we see that execution, the overall weighted signal from the technicals is a conditional sell.
Okay, we have to shift gears here. Moving from strategy to risk, because Toshi's high profile attracts, well, bad actors. We need to talk about security protocols.
This is critical. There's a specific warning in the sources about the Toshi information hazards.
Right, an analyst with that name?
Yeah, an analyst sharing general market commentary should never, ever be mistaken for providing specific signals for the Toshi token. The name overlap is a real risk.
And we have to talk about security in general. With the market moving this fast, you just can't trust unverified signal providers.
Especially those Telegram groups promising guaranteed high returns.
Let's just list the classic red flags. You should really internalize these.
Number 1, guaranteed high returns. That's always a lie.
Always. Pressure to transfer your assets off a verified exchange.
Demands for surprise fees or attacks to unlock your supposed earnings. And critically, connecting your wallet to any unfamiliar website or D-app.
What's so fascinating is that with crypto, the transactions are irreversible. Capital defense has to be your first priority because lost funds are gone forever.
And this need for extreme vigilance, it actually points to a larger debate in our sources.
This is where things get really interesting.
It's a radical view from figures like that Toshi analyst who argue that the risk isn't just about a few bad actors, but about the entire global financial system being fraudulent.
That's the perfect bridge. We are moving from verifiable technical signals into a deep philosophical battle over the definition of money itself.
This is a highly radical perspective outlined in the source material. It reframes the entire crypto debate.
So what's the core claim?
The analyst asserts that the vast majority of the $3.2 trillion crypto market, we're talking BTC, ETH, XRP, is complete fraud. They call them economically worthless security offerings and Ponzi schemes.
And the claim is that this entire market is centrally controlled.
Centrally controlled, specifically to distract the public from the one genuine decentralized protocol that actually threatens the global banking structure.
Okay, so how do they make that distinction? What is the genuine one?
It's a technical distinction. The source claims genuine Bitcoin must operate through the original Bitcoin protocol and use a legacy address, one that starts with the number 1.
And allegedly centralized entities corrupted this.
Replaced it with versions that are structurally unsound. They specifically cite BTC addresses that start with 3 or BC.
And the genuine protocol, according to this analyst, is...
It now has the ticker symbol BSV. It trades around $30 or $40. But the analyst claims its true value, if it captured the derivatives market, would be $4 million per coin.
$4 million. And why? What makes it supposedly so superior?
Its core economic design. It's claimed to be the only system using true proof-of-work economic competition and a chain of digital signatures for privacy and accountability.
And it also allegedly solves the scaling problem.
The unbounded scaling problem, yes. The sources claim it can already handle millions of transactions per second compared to Visa or MasterCard, which stall out around 50 or 60,000.
If we connect this radical view to the bigger picture, the source material claims this is all just a tactic.
A tactic in a 3,000-year religious and economic plot.
The end goal being
a totalitarian one-world government, with the financial system as the ultimate tool for control.
And to support this huge claim, the source cites a long history of what it calls manufactured crises.
Designed to install central control and build a surveillance state. Let's look at the alleged evidence.
Okay.
First, the sinking of the Titanic in 1912. It's claimed to be insurance fraud and a way to murder key opponents of the Federal Reserve Act.
Then there are the world wars.
WWI and WWII are framed as mechanisms for printing currency and draining Europe's gold reserves, collapsing their economic sovereignty.
And more recently,
the timing of COVID-19. The claim is it was brought forward from a planned 2025 date to preempt Bitcoin's organic growth phase, a global lockdown before decentralized money could take hold.
And finally, the anchor of the modern surveillance state, 9/11.
Cited as the excuse for installing sweeping surveillance tech and, allegedly, to cover up the collapse of Building 7.
This narrative of geopolitical control, it extends right up to modern regulation.
It does. Our sources detail actions by the UK's FCA, the Financial Conduct Authority. They claim it's implemented a blanket ban on UK citizens buying crypto with British pounds.
And the alleged reason for this ban?
Because the genuine Bitcoin is an existential threat to the centralized financial system, and London is the financial capital. The FCA is acting as a gatekeeper.
But the sources also offer a loophole.
They do. Since the FCA only has jurisdiction over GBP, UK investors are told they must move their capital out of that jurisdiction, convert it to euros or dollars, to find an independent supplier of this genuine asset.
Wow, this has been a deep dive into two profoundly different worlds.
It really has.
On one hand, we analyze the complex, volatile reality of a hybrid token like Toshi, which demands tactical analysis and constant vigilance.
And on the other, this radical claim that the entire crypto ecosystem is a fraud designed to distract us from the one true commodity money, BSV, that promises sovereignty but is being actively suppressed.
We've been given a tremendous amount of data to process, both technical and conspiratorial.
And this raises a really important question for you to think about.
Yeah.
When you look at that graph cited in the sources, the one showing that $16 trillion vertical spike in the M1 money stock in 2020, a stark illustration of centralized monetary expansion.
Mm-hmm.
How much do you value absolute security and decentralization over speculative opportunity? Is the volatility we see every day just noise? Or is it evidence of a deeper systemic battle over the very definition of money itself?
Food for thought, indeed. Thank you for joining us on this deep dive.
Until next time.